The digital financial revolution. The rapid transformation of financial services is truly remarkable, because it was only 5 years ago that most people had never even heard of FinTech, let alone used a financial technology company to make in-store payments or international money transfers. The industry expectation is that over the next several years, gradually more people will begin to trust FinTech providers for their financial service needs. And this could be the issuance of a credit card to obtaining a mortgage. Although research has shown that there are many people who are still distrustful of alternative providers such as FinTech companies, and this group are primarily senior citizens who express that nothing will make them change or motivate them to use FinTech providers for financial services that their current retail bank can offer instead. Another defined trend which appears in similar research is how older adults tend to shun the use of making mobile payments altogether. In early 2015, the Federal Reserve decided to ask various financial consumers in the US why they do not utilize their bank's mobile app to conduct their financial services. The majority said it was easier to pay by cash and credit or debit card, while a large proportion highlighted security concerns and questioning the benefits of using mobile payments. Not surprising in research showing people who indicated a lack of trust of retail banks were often the early adopters of FinTech companies, with millennials being almost 3 times more likely not to trust a retail bank as opposed to those who are ready and willing to consider FinTech alternatives. To date, the most common experience of people in using a FinTech company has been for payments in store, with a large number having admitted that they had used a service such as Apple Pay or Android Pay to purchase goods in a retail shop. The next most common experience for people using a FinTech company was to make international payments, followed next by obtaining a loan, and the fourth reason of use was for managing personal investments. The expectation over the next several years is that people will continue to make the change from their retail banks in larger numbers. Reasons given by certain financial consumers for the change has been for the better and more personalised experience of FinTech companies, as well as the lower cost of their products and services. Specific changes which redefined a banking model. Digital financial service firms have been making large inroads into the banking sector over the last decade, although their success to date has been relatively minor. It was only when the below underlying conditions changed within a short space of time that FinTech companies were finally able to rapidly emerge and gain significant market share from the more established players. Loss of customer trust. It's now been well reported that traditional retail banks have lost the trust of most financial customers. The financial crisis of 2007-2009 created a seismic shift in the dynamic of trust in banking services, and thus created a slight opening for FinTech companies to gain a foothold. What has further eroded consumer trust in retail banks is that in the years since the crisis, 20 of the world's biggest retail banks have paid more than $235 billion in fines from having breached a variety of financial regulations during and before the crisis. Industry analysts have stated that banks have not regained much, if any, of the trust that was lost. Edelman's Trust Barometer, financial services as an industry is ranked second to bottom in trust, below historically disliked industries such as pharmaceuticals, oil and gas and big tobacco companies. The emergence of FinTech companies would have eventually happened, but without the global financial crisis, it would have taken much longer for them to emerge and gain a decent share of the market. Better service experience. The disruptive innovation developed by FinTech companies has provided financial customers with not only a better banking experience, but providing services which are faster, cheaper and more convenient than having to perform similar with a retail bank. In addition to this, customers are now being provided with a plethora of alternative service offerings outside of those which have been traditionally offered by banks. By comparison, the banking industry still has an outdated look and feel about it. Retail banks will now be forced to play catch-up, with many of them needing to overhaul their technology systems and online service offerings. Those banks making a concerted effort to improve their digital offering will be rewarded with the ability of being competitive and not be rendered obsolete by the rapid rise of financial technology companies and their innovations.